Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is your weekend edition for Friday, November 4th, 2022. Okay, I watched today how the market was reacting. You know, when we came in, before the jobs report and everything came out, the market was already up 200 points. In the Dow and other markets were up. And I'm going, what the heck's going on? Why are we up so much in front of a jobs report? And I did my reading, and all of a sudden I realized what was really going on. Because I looked at Dr. Copper. It was not up 26 cents. At that point, it was up, I think it had hit 800 points up or something when I was looking at it. Remember, I get up a lot earlier than most of you. I'm up 2:33 in the morning, Chicago time. I'll glance at markets, lay there, talk to my kitty, Ivy Rose a little, see what she wants to do in the markets, and take it from there. I'm, of course, laughing about that, but it is. She's with me all day when I trade, I can tell you that. All right, so I'm looking at it and I'm going, I get it. The market is so anxious for China to leave this draconian method and get back to opening the world's second largest economy. We know what went on at the Party Congress. We know China's looking within. We know that they're friends with Russia, they're friends with Iran, they're going to go their own way. We are not putting our arms around them and calling them buddy. That isn't happening. So you got to look at the next step. What are they doing? If their economy opens, you're going to get demand for oil, copper, God knows what else. Finance will open up. Other things start taking place. That's what I was looking at. I'm going, Then I looked at the U.S. jobs data. So the revision was all telling to me from September. They went up another 50-some-odd thousand jobs to 315,000 jobs. Monster number. We came in at 260. The market was looking on Bloomberg for 193,000 new jobs. And here we come in well over that. But it's still, folks, a 60,000 job reduction. And if you go back, that's the biggest in about a year and a half. That's a big number that we fell. So that's going in the right direction. People didn't pick up on that at all. That helped the stock market a bit. The problem is, and this is a big problem, it's still 260,000 jobs. It's not going the way the Fed wants. We're still adding a lot. What does that mean the Fed has to do? The screws keep tightening. That's what goes on. Now, there's another shoe going to drop this week, and I don't know which way it'll go. Left, right, cha-cha, who knows which way. But if CPI comes in hot again, the Fed's cornered. It just has to keep going until CPI gives you a trajectory down. Believe it or not, the 260,000 job number is a trajectory. It's a big drop from 315. I don't think anybody's talking about that. So I viewed today as more of a China day than anything else, and why most markets came alive. Now, off that, look at how the dollar fell, 200 points. That gives you a prop to all the metal markets, to the grain markets, to the energy markets. But there's another story in energy. We are ending the SPR oil now. So we're not going to get those millions of barrels every day coming back at us on the market. And that means we're beginning the bullish phase. Yes, you heard what I said. We're beginning the bullish phase in terms of less supply available within America, because unless the president gives another round, and the midterms are here. Why would he do that? And he's probably going to lose either the House, the Senate, or whatever. He's going to have his hands full. Welcome to Donald Trump's world is all I can say. So we look to see what it is. By the way, Donald Trump, they're talking he may announce it after the midterm. So not this coming week, but the week after, he may announce whatever he's going to do. When I come to the S&P, no matter how I look at it, you're under on the monthly chart, the 18-month moving average. Let me explain the basics. When you're under a key moving average, the bias, that's all it is either down or up. If you're above it, the bias should be up. If you're down under it, the bias should be down. It's a filter on your other technical indicators. That's how I teach in my charting course. I only use 5 indicators in my course. You can master this. I promise you can master it. I get to see somebody that say they didn't get it. I then look at the weekly chart on a closing basis. All that you did is you came up last week and you kissed the 18-week, another resistance point. The bias is still down here. So now I want to go look at the weekly charts. What are they doing? Well, I still have a pattern as I'm looking at it. Lower highs and lower lows. What's the definition of a downtrend? Lower highs, lower lows. Market went up there. If it falls back, where's the support? Well, we saw it already once. The first challenge often, the word is never always, often, very often. The first challenge of a 200-week average, that's a 4-year average. Do you agree? 52 weeks a year, just think about it. Or on the upside is often a spot that chartists will look at and say, maybe I shouldn't be pressing the market any longer there. Let's see what it does, be it downside or upside. Very common. You couple it with the Bollinger Band. What are the odds of staying outside of the black bands on the chart? 5% of the time. Therefore, you get a probability, that's where I think the smart money is going to step aside till they see what else to do. So you got your bounce in a bear market. You have not left your bear market. I don't care what other people want to tell me. Even if you rallied straight up, I'd be left with a pattern right now of if you took this out straight up, you'd have a higher high and lower low. That's all. But if you start down from here and just keep like this, you're still in a bearish pattern. Why? You have the trend down, the bias is down, market is corrected. It's gotten itself to the point where when it reopens Sunday night, the odds favor this number that's under 29 will be over 30. And that's because the market of where it finished. That's what I think the math is going to do. Do I know? I don't know. It depends where it opens. You know, China can say anything tomorrow and the market can be dramatically lower or higher. We have to wait and see and how what we think that reaction will be. But I'm still going to look at the resistance at 39.14.5, and you were down for the week 3.5%, roughly 3.37. When you come to the Dow, it's a different picture. This is the picture I was explaining. You had been, past tense, had been, let's see if I can bring you right here. You had been lower highs, lower lows, same setup. You got right here to the 200-day average in the Bollinger Band. Go to my tapes 4 weeks ago. They're up there on YouTube. I'm sure I would have said, this is where I think the pros are covering. Yes, it slipped further. It doesn't matter. It's a zone to me. That's all. And when it comes back, the resistance didn't even hold the market. It went right over the 18-week average. So that means the next resistance is clear-cut. It's the 100 and the Bollinger Band. You're also out of your downtrend. Now you have a higher high, lower low, just what I was describing before. And as you can see, the market's sort of stalling right there. But nothing on this chart can turn me into a bull. But it can't turn me back into a bear right away either, because now you've destroyed that pattern. We're ready to waffle, sort of like that. The NASDAQ is still very much in the bear camp. So you got the S&P and the NASDAQ bearish, lower highs, lower lows, and the market did make an attempt here. In fact, it's still attempting. It's fighting its battle at the 200-week average since it got to them. It first hit the combination back here 3 weeks ago, 4 weeks ago if you count that week. And this is your first bounce away from it. Momentum still to the downside, but down at levels that you get at 19 and 20, I don't think you attract new selling in the market. Obviously, I'm not right when I say that. You're down 6% for the week, but that's how I teach the charting. When I look at the Russell, this is more in line with the Dow. We have a lower low, higher high. We broke the downtrend when we took out the high right here. And you can see that. Let's see if I can get this to work with it. There we go. It is going to work for me. There we go. Lower highs, lower lows. You fought a battle for 3 weeks at the 200-week average and the 18-week average. You gave up on it. You came down. You got into that territory where I'm telling you, this is a rough territory. I don't think when you get these numbers like you have here under 20 that you attract new selling. If it embeds, which means both numbers are going sideways under 20 for several weeks or more, then it's a different story. But you didn't have that. This rally at 1794.40 negated the whole bear trend. Lower highs were broken. So now you're coming up to the 1805 to 1796 level. Now the story is it going to fail there? Is it going to get through it? As you can see, it reached through it and then fell right back. That's because you're in an important zone, okay? But there's not a trend. You're void of a trend in this market. In the 30-year bonds, you're still very much in a bear trend. You're embedded. I keep watching. I was watching today at the end of the day CNBC, you know, the market wrap when they all do it, and they're all saying they see the end of the big run in the 10-year notes and the others. Okay. Obviously, they got better tea leaves than I do because I don't see that. I don't know where the Fed has to go to. I do agree with them. The 2-year, 10-year can go out from here. It can go to 100, something we have never seen. When it was down at the 20s, I was on here talking to you that if that thing's going to go 50, then maybe to the 75, and then maybe to the 100 zone is very possible. You're on your way. That you've been doing this all the way through. And you do get sharp corrections in that 210. But it's still moving that way. Why? Because the Fed's not through. And they only affect the short end of the market. This end, I get what they're saying, but I'm not seeing it on a chart. You're embedded. The market is still saying sell rallies in that market. When it ends, it ends. The same in the 10-year. You're embedded. Get the red line to close over 21. I'll revisit my bearishness and be knocked out. But right now, are you making money buying or selling the rallies if you're a trend trader? Well, so far, you can't. Anything you tell me that you're buying it to make money doesn't make sense. You're right near the lows of the whole move. Dollar index. The dollar is stalled. We lost together the embedded reading back here. Do you remember I said when this happened, watch out now. This was the reading, 78 under a 79. I said, now the odds favor, unless you re-embed right away, the odds favor you're going to make a run back to the 18-day average of closes. That's what I'm looking for. It's what I teach in my charting courses. Now, the weekly chart does not have the same probability of doing that as the daily. The daily has a greater probability. That's what I've learned over time. But I think I'm getting my money's worth. I feel good about it, okay? You have certainly, though, you got a downtrend with an upside bias, and you're in a correction to get momentum outside of the 70 level. That's what the market's doing. To do that, you normally break further. In the euro, it's the flip-flop, the other side of the mirror. Why? 40% of the dollar index is made out of the euro. The worst thing you as a trader can do, and what I've learned in futures, you don't want to be short dollar index and long euro. Be in one of the two, okay? You don't need both. I made those mistakes so often. Again, I'm the Swiss cheese guy. I've done everything wrong, as my wife will attest to. But as you can see, right through here, that's the battleground you're fighting. In the Canadian dollar, this market's suddenly acting like more of a rally. You lost the embedded reading. Come with me, baby. Right here. What's the reading? 21.49. What do I think the market's going to do? Basis that, on that Friday, as far as I'm concerned, short trades should be closed, and now you're waiting to see, does it re-embed or do something else? We'll just jump 72 points. And if I'm right, and I'm not necessarily going to be, pricing the 18-day average, unless you get under these lows right now, this low specifically of this week, are likely to come together. Do I really use this low? The answer is no. In the course, you know the right one. But for you guys that haven't taken the course, take the course, learn. Okay, Japanese yen. All right, you're flirting with losing the embedded reading, but you haven't lost it. The bears are in control and stay that way on the weekly chart until you lose that reading. Lose it, and then I think price and the 18-day average come together. Okay? Is there a way to get short? There is. Take the enhanced Bollinger Band course. Now, Bitcoin. This is what you call bottomy action. After a huge decline like this, the market is now basing out. I cannot tell you the day it's going to break out and go one way or the other, but the odds strongly favor you're going to move. Now, you had an embedded reading. You went back to the 18-week average of close. That's your battleground. The next big battleground's up here at 23,860 to 24,244. It is not in a trend. It's out of a trend. Do we understand the difference there? Brent WTI, the closer they go in, the higher Brent keeps going, all energy prices going up. Does that sound to you like we're beating inflation? No. Let me give you another scenario that's very painful. China abandons this total zero tolerance policy in some manner. And they need oil, copper, food products, blah, blah, blah. As their people come out, the way we in America are out, the way people in Europe, Australia, New Zealand, I go around the world, okay? Does that sound to you anti-inflationary? We've seen the lull. I'm fearful that you're going to get more inflation coming because they're going to be consuming again if they relax. Something to think about. WTI. It's throwing out bullish signals. Higher lows, higher highs. You're over the 18-week average, momentum pointing up in WTI. Gasoline, it refuses so far to stay over that 18-week average. Okay, it's fighting a battle to be bullish. It loses the battle if you get back under here, the 249.05 level, but right now it needs to get up and over that to get anything further going to the upside. So you put it together, you try to come up with a game plan, and I have one for you. Because I want to give you free, don't leave me, I want to give you free access to my full research. I'll do it for a 2-week period. You get my written updates twice daily, Monday through Thursday minimum, sometimes special updates. You'll get one on Friday, one Sunday night. I've already begun writing the Sunday night, so I'm far along with that. Then you get access to my subscriber videos, exact entry, exit. Where do you go in? Where do you go out? What do you do? You'll see me succeed. You're going to see me fail. Okay, both ways. No trader, nobody walks on water. There is no such thing as a good trader that doesn't have losses. It's how you control them. You got to have stop orders. You got to have money management tools. I explain. That's the difference. I don't put out written update, buy here, sell there. I back it up on the video, because in the video I'm explaining the money management tool, why I'm saying what I am. I'm laying the trade out to you. You don't have to take it. I don't manage money. I have brokers that will work with you. They don't manage money. I refuse. Nobody in my company manages money. You're going to be the ultimate guy that says, yes, pull the trigger, don't pull the trigger, or you're self-directed and you're doing your own thing and you're using this and saying, hey, I want to see what he's thinking. Well, here's your chance to do it. Go to our website under free offers, or just move your cursor up here. You'll see the free offer icon. Give it a click and sign up for anything else you want at the same time. I'm Ira. You have a great weekend. I will see you all come Monday. Take care.